Hello and welcome to Property Question Time. I'm Stephen Galpin and this is the show that you can get your questions answered by our team of property experts. And joining me today is Richard Murray, CEO of Eurolink, provider of vehicle management software. Welcome. Good to have you back.
Thank you, Stephen.
Good. And joining Richard is Ian Humphreys, CEO and founder of Brickflow, digital marketplace for commercial real estate finance.
Thanks, Stephen.
Welcome
Thanks
to you too.
Back.
Good. Well, good to have you. Okay, Richard, we're going to get straight on with the questions, and your question is this. With the advent of artificial intelligence, how do the experts think that this can benefit the property sales and management sectors? Now, you've only got 5 minutes.
Yeah, you've only got 5 minutes. Well, yeah, AI, I've talked about AI on this program before. It's, and I think I said at the time, it's not going away. It's a huge industry already. And I think now, since that program, we've seen that it's sort of everyone's talking about sort of chat GPT and using it now on a fairly normal basis, I guess, in their workplace. From a sort of sales and lettings perspective, I think chatbots are probably the most widely used application of AI at the moment. Probably, I would say. I think they've got a great place, I think, in an agency's sort of service set. I think some agencies might be concerned about AI. I think some agencies might be concerned about using chatbots, at losing that kind of personal service or personal touch. They want to talk to people. It's a people business, and that I think is maybe where some agents might struggle to adopt. However, if you focus on things like procedural support. So I don't know if an applicant's filling out their referencing, for example, or their anti-money laundering documents for their landlords. If there's quick questions they want answering at the time, in real time, I think chatbots are a great example of how AI is already helping the industry. I think taking it down to a really sort of basic level, just think of a negotiator going out on a market appraisal. Seeing a property, taking some notes, but then coming back and using one of the AI tools to generate their property particulars. It won't be perfect, but it will take a lot of the work out of what they're doing. So lots of time savers. But again, look, my belief is that it will help support repetitive business processes, aggregating data, really driving better business decisions. Has always been my take on AI.
On the AI availability at the moment, as you say, you can go onto the internet and you can type something in and it'll come back with a sort of preformed letter for you or with the information you want. How are they monetizing that?
Well, there's lots of subscription models already in place that people can. Look, it's a typical free to use, but if you want the pro version, then you need to pay. So it's a very, very typical subscription model that is being used to monetize.
Okay, and so you're really seeing the benefit going towards perhaps assisting the professionals in the marketplace as opposed to replacing them or replacing particular functions.
Yes, and I've always been of that view that I think it will be a great support for agents. I saw there's an advert that's gone viral recently. You've probably seen it, Ian, where a recruitment agency in the construction sector has put a giant billboard ad on the side of a part-finished building, and it says, "Hey, GPT, GPT. I never get that one right. Finish this building."
Right.
Which is, and obviously the message is your skills are valuable. So I think in the construction industry, there's huge supportive benefits to AI. However, I think people need to remember that there are skill sets that will always be needed, and not to worry too much about it.
I mean, Ian, in your business, in the finance world, I mean, I could see AI perhaps spotting weaknesses in mortgage applications and that sort of thing, and identifying, danger areas perhaps.
Yeah, it's interesting. I was listening to a podcast actually about a company in America who already run this kind of AI across mortgage applications, and there was some real interesting data that came out of it. That if you complete the form with your first name where you don't capitalize, you're twice as likely to default as somebody who capitalizes the first name. Just and hundreds of little nuances like this that came out of the data. And this is across millions of mortgage applications. But I think AI in general it's a drive for efficiency, isn't it? That's the way that I see it. Is we're all obsessed with being more efficient and being able to get more done in the time that we have. So I think AI, I agree with Richard entirely, is sort of there to do perhaps 80-90% of a task, and then you to finish it off. So perhaps publishing some content, writing a letter to an employee, something like that. You can do that. We've recently done a job advert where we asked ChatGPT to write the job advert, and it took us 1 minute to 2 minutes to go through it afterwards, and it was pretty perfect. And then we've posted it. So it's that incremental time saving that you get across the board. But I think what it's also, to your point, Richard, about it's delivering what the customer wants on their own terms. And what I mean by that is that if I'm a busy person and I need to go through an AML check, I probably don't want to do that over the phone with someone at prescribed time, 3 o'clock in the afternoon. I've got a board meeting or whatever, but I might be able to log on at 11 o'clock at night and complete that but if I've got questions about the process, if I've got AI there that can sort of do that, then that's a really valuable service to me.
In some respects, AI is only an extension of what we're doing already, isn't it? And that as human beings, we're just the finesse on top of it, really.
Yeah.
And I mean,
and
I'm just thinking in terms of insurance. I know I looked at a program where they were saying if you apply for a quotation for, say, car insurance, you'll get a better quote if you apply at least 21 days before your policy is due.
Yep.
Why? Because they think you're a more responsible person, planning ahead, being sensible. And, AI is just an extension of that, really, isn't it? But anyway, well, there we are. Okay, well, Ian, let's get on with your question. I've taken out a bridging loan on a buy-to-let property I have bought. I did this as the property required a large programme of refurbishment before it could be let. However, the project only took 6 months to complete rather than the 12 months that was estimated, and was designed to finish at the 12-month termination of the bridging facility. I have to pay quite a substantial penalty if I finish the bridge early, so I will need to ask the bridging loan providers if I can let the property early. I'd like to get a feel of what they might say before I risk rocking the boat and getting a rejection. Any advice, please?
Yeah, sure. So a couple of things. I mean, firstly, it would be unusual for someone to have a make whole or a retained interest period for 12 months. Normally, you might find it's 1 month, 3 months, 6 months. Then after that, you're free to exit. So I would say, best starting point is to take advice. Speak to a broker, because they probably would have been able to get around that issue in the first instance. And I think, that's really what it comes down to is that there's always that chance that you could complete earlier. So it's the what if scenario.
I was going to say he's done extremely well, hasn't he? Doing the project
exactly.
half time.
Yeah. So you could ask what were they planning to do that they didn't do, perhaps. But I think a lender generally, what will they feel to that situation? I think they're going to be relatively relaxed. I think with all these things, it's always about dialogue. So explain to them you finished early, that it's actually going to be easier for you to obtain a mortgage to repay them with a tenant in situ. And I think they will understand that, it will resonate, and they will allow it to happen. But you can't guarantee it. But again, a broker could probably steer you better on that.
Is it ever the case that the bridger will become the long-term lender?
Yeah, absolutely. There are quite a few lenders. Perhaps they've gone the other way. They do long-term debt, and now they've encroached into the bridging market. So they allow you to do these sort of refurb to exit products. So there's quite a few of the challenger banks offer these, where you can take a product which allow you to borrow a percentage of land purchase, percentage of the cost that you envisage spending on refurbishment, and then allow you to turn that debt out. So they will effectively value the property as it is today, and then value what they think it will be once you've done the work, and then the model will be based on those two projections. And then once you've completed the work, there'll be a re-inspection just to check that that work is at the level they expected.
Okay, great advice. Thank you very much indeed.
No problem.
Okay, well, that's all we've got time for in this half of the show. So join me again after the break when we'll be asking Richard and Ian more of your questions. Hello and welcome back to part 2 of Property Question Time with Richard Murray and Ian Humphreys. Welcome back, guys. Richard, your second question. I'm thinking of going 100% digital in terms of managing my letting and management business. Can the experts advise me on how the new letting regulation and requirements could adapt into current software packages on the market, or will totally new systems be required? I mean, this bill is quite extensive, isn't it?
Yes, yeah.
And I presume it's going to be a field day for you guys, isn't it?
Yes, I mean, a lot of it comes down to just being even more professional. I think, having really good systems, looking after obviously the people who are using them, making sure they're well trained, their knowledge is up to speed. Keeping good records of everything down to messaging. Simple messaging, communications, not just the documentation and all the compliance side of things. But I think going 100% digital is absolutely the right strategy to help an agency cope with rent reform. I think it's absolutely the right strategy, and I'm sure the lawyers would tell them the same. Yes. Because the problem is when everything's sort of not digital, or you've got certain information in certain files, or it can get lost. If you're in a situation with rent reform where you're being challenged, maybe on some sort of obviously it's designed to overcome things like no fault evictions. But if you've got to prove that there was fault or there is some sort of fault, and you can't prove that because you haven't got everything in at least maybe 1 or 2 or 3 platforms that are all talking to each other, I think that would be where the problem might lie.
Just record keeping is just going to be absolutely critical to all this, isn't it?
Absolutely critical now, yeah. And providing the courts with a succinct pack of information that is clear and unambiguous, really, because that's where things can fall over. If you're providing a legal pack, and it's got any sort of ambiguities, that case is likely to be thrown out, and then as an agent, you're in trouble.
I sat as a magistrate for many years, and I know what the waiting times are like in court. And although magistrates' court don't hear this kind of thing, I think the waiting is equally great in the county courts. And I just wonder, I mean, although the government is saying that they're going to work with the Justice Department and all the rest of it, I just don't know where they're going to get the capacity to deal with all this stuff. I just don't know where it's going to happen. I mean, tribunals are overstretched, county courts are overstretched. I mean, if you've got rent arrears, I mean, it could be a year before you get it into court, even though you stick to the sort of prescribed time period.
Absolutely. I mean, that's compounding the problem, essentially.
Yeah. And also, I think with a number of these new regulations that deal with applications to let and whether you're putting up rents or whatever, I don't know where people are going to get this heard within a relevant time. Because by the time you've had an argument with your landlord about the rent and you get it before a judge, I mean, how long is that going to be?
I couldn't agree more, particularly post-pandemic as well. Yeah. There's still a hangover from that, and the courts have suffered, really badly.
Yeah.
However, the question is clearly from an agent, and from an agent's perspective, irrespective of those delays, irrespective of whatever challenges they've got,
get it right.
They need to get it right. And I think going 100% digital is a great strategy.
Yeah. Do you agree with that, Ian?
Yeah, and I mean, I don't know as much about it as perhaps you guys, but I think absolutely it's digital footprint. It's that record keeping. It's the same as if you record a telephone call, right? In a bank call center, you need to be able to show that the evolution of the problem, how it's been dealt with, has it been dealt with correctly, and are you just for taking the action that you have?
I suppose it's similar in a way. If you're a lender and something goes wrong, then you've got to backtrack on the whole process, haven't you, to see where it went wrong. Were you misled? Did you mislead? Or, you know, it's all quite serious stuff now, isn't it?
Yeah, it's similar to defending a complaint, I guess, from the financial ombudsman. You have to be able to show that you took correct action by the client. We've got things like treating customers fairly, FCA directives and things like that ensure that you are acting in the customer's best interests.
Okay, good. Okay, well, and we'll get on with your second question. With the current uncertainty of whether interest rates are at their peak or not, could the panel advise on the following? I'm about to start construction on a moderately sized residential development. I have two major concerns, which are A, the fluctuating cost of materials, and B, the cost of finance. Would I be better off securing short-term finance to get started and put a longer-term facility in place when rates settle, or would the cost of swapping around the facilities outweigh any savings? Now, you've only got 5 minutes on that.
Okay, yeah. So I think firstly, let's look at interest rates. When I was last on, we talked about whether interest rates had peaked, and I said probably we were near to the top. Well, that's been proven to be wrong.
That was at 4.5, wasn't it? Yeah.
So yeah, we thought maybe 4.5 was the peak. I think now the markets are predicting 5.5, and the main reason for that is core inflation. So once you strip out food costs and energy prices, core inflation was still very, very high, a lot higher than predicted. So it's looking like now we're going to maybe go as high as 5.5% before the end of the year. But the actual drop in rates is now looks like it will be steeper, which is encouraging. But in terms of the question specifically, would you be sensible trying to take a shorter term deal and then going into a longer term deal? With a development, I think you should always try and work with the same lender throughout. I think trying to switch partway through, you'll point to whether the savings are going to be eroded by setup costs of a new facility. I think is absolutely true. I think it would be very difficult to find a margin of difference between two lenders that would overcome those changing in fees. So you've got arrangement fees, valuation fees, and legal fees, which are going to run into quite a big number on a decent sized development. But I think when you get to the point, development finance by itself is short term in nature. So you could if you're going to keep some of the development afterwards, then a short term development loan, and then into perhaps a term facility when in a year and a half, 2 years time, when we hope rates will be lower, would absolutely be the right approach. But build costs, you mentioned as well, they absolutely look to have peaked and stabilized, which is good. They are still going up gradually, but it looks like it's smaller amounts each month. I think generally construction tends to have its recession earlier than other industries. So I think construction really last year was sort of probably its worst point, and that's now starting to come back to some kind of normality.
I think, if I remember rightly, I think we talked about this last time. Bank of England are putting interest rates up to counter inflation, whether it be core inflation or the overall figure. But this time we haven't got inflation for the same reasons that we've historically had, have we? So I do just wonder sometimes whether they're really using the right tool.
Yeah, I think.
And if it's not actually fueling inflation.
Yeah, I think we did discuss this before, and I think we agreed at the time that it seems to be a bit of a blunt instrument, but it's the only one they've really got other than quantitative easing, which is we did too much of that, and that's why we've got the situation we've got, right? So it has to happen, and hopefully the medicine is short. But we've got to take our medicine, basically, I think is the
do you think time is not the medicine?
Time is, but I think what it is really trying to get it back quicker than perhaps it would happen naturally, organically.
Yeah, there must be a lot of pent up sort of money waiting to be used, to be spent, to be invested.
Yes, I think there are, and I think by putting interest rates up, by encouraging people to keep money as savings rather than trying to chase profits, that will obviously bring prices under control.
I know, Richard, you're interested in commercial properties in particular, and we've gone through the phase, haven't we, of, oh, we'll all work from home, so the big office blocks are no more needed. That seems to be going into reverse now, and the firms are saying, well, actually, I think we do want you in, and I think we do want to use the building that we've got a 25-year lease on and paying a lot of rent for. I mean, we're in very difficult times, aren't we, to settle where we need to go, and I sort of feel for this developer in a way. Just you're surrounded by question marks, aren't you?
Yeah,
on everything you do.
That's the problem. Yeah, that's the problem.
I think on the residential side, it seems to be quite stable. If you're in a good area, you can demonstrate demand for your product. You're always going to sell on the residential side. We still have a huge housing shortage in this country. If you speak to Shelter or look at Shelter stats or others, they're predicting is sort of about 1.5 million shortfall in housing in the UK. And that's only going to grow now that the government have scrapped their target of 300,000 houses per year. So, but certainly on the commercial side, it's a very difficult time to be a developer. Like, what do people want? I don't think we know what we want, and that's the problem.
Yeah. So as if it hasn't settled yet. We were talking about it earlier, actually, weren't we? About time in, time out, hybrid models. You were talking about a contact who's got everyone in 5 days a week.
Yeah, I think nobody's got it right yet.
No, I agree.
Everyone needs to be in the office for part of the week, I think. But if you go into London, Mondays and Fridays, you're walking through a ghost town almost. But Tuesday, Wednesday, Thursday, everyone's in. Yeah. So it seems to be that those 3 days, 2-3 days in the middle of the week that everyone's being asked to come in. But if you're paying for an office, you're paying for 5 days a weweek. You're not paying. Yeah. So you've got 10 people, you're paying for 50 days in a week, but actually you're only maybe utilising 20 of them. You're overpaying.
Well, I live just across the road and I can look out of my windows at the sort of banking sector here, and I see the lights on now pretty well 7 days and 24 hours. So I think we're heading back for an office occupation period, aren't we? Anyway, there we are. That's all we've got time for today. So a big thank you to Richard Murray, CEO of Eurolink. Thank you, Richard, for coming in.
Stephen.
Ian Humphreys, CEO and founder of Brickflow. Thank you for coming in.
Thanks, Stephen.
I'm Stephen Galpin. Join me again next time on Property Question Time.